The stubborn mule trumps new war on the Fed. President Trump has launched a public campaign against the Federal Reserve, demanding immediate, deep interest rate cuts and calling for a new Fed chair. Jerome Powell, once Trump's own pick, is now in the crosshairs, accused of holding back the economy with high rates. Trump's push isn't just about policy, it's about reshaping the Fed to fit his political agenda, aiming for a pre-election economic boom. This turns the Fed from a quiet regulator into a political lightning rod, with every move scrutinized for political motives. The stakes, your mortgage, your grocery bill, and the stability of the entire economy. Is the Fed protecting the economy or caving to presidential pressure? That's the trillion-dollar question. Trump wants lower interest rates, promising cheaper loans and a booming stock market. Lower rates mean easier borrowing for homes, cars, and businesses. Great news for anyone with debt or investments. But there's a catch. The Fed uses higher rates to fight inflation. Cut rates too soon, and you risk reigniting price spikes for essentials like food and rent. It's a tug of war. Trump wants the economic sugar rush, while the Fed fears an inflationary hangover. Imagine slamming the gas while approaching a sharp turn. Thrilling but dangerous. The wrong move could undo years of hard work fighting inflation. Cheaper loans are nice, until your grocery bill doubles. Trump's team is floating a wild idea, naming a shadow Fed chair now, months before Powell's term ends. This would create a bizarre situation. Two public faces for Fed policy, one with power, one waiting in the wings. It's never been done before, and it's pure political theater. The result? Confusion for markets, investors, and the public. Who's really in charge? The current chair or the president's pick? This uncertainty could weaken the dollar and even push long-term rates up, the opposite of Trump's goal. The Fed chair's job becomes less about expertise, more about loyalty. The world's most important central bank risks becoming a political pawn. The Fed's independence is the backbone of America's economic credibility. It's supposed to act on data, not political pressure, like a referee calling the game fairly. If the president can dictate rates, short-term booms could lead to long-term busts. Trump's attacks and shadow chair plan threaten to blur the line between politics and policy. If markets lose faith in the Fed's neutrality, borrowing costs rise and the dollar weakens. History shows that politicized central banks fuel inflation and instability. The lesson Fed independence isn't stubbornness, it's protection against repeating past economic disasters. Undermining it puts everyone's financial future at risk. So what does all this mean for you? The Fed's next moves will shape your mortgage, car loan, and credit card rates. Trump's push for lower rates could make borrowing cheaper, but risks higher prices for everything else. The stock market may soar, but a weaker dollar and rising inflation could eat away your gains. Every American will feel the impact, from homebuyers to retirees. The real question, should a president have this much sway over the Fed? The outcome will set the tone for your financial future and the country's for years to come. So yes, this is one political fight you can't afford to ignore.